Welcome back to the Everyday Finance Podcast, where we are working with the everyday person to maintain financial security and establish financial independence. My name is Alexander. I'm a South Florida realtor specializing in the Boca del Rey area. And today, Garen and I are going to be talking about renting versus buying.
Now, let me actually just break it down for you guys because there are actually some people that don't know the difference. Buying a property is where you essentially go out and you make a purchase of a plot of land that could or could not have a building on it. Now, renting a property is essentially paying somebody who owns that property a fee every month or every 6 months, which could be a lump sum payment. Of course, it depends on what agreement that you have with the landlord, but basically you pay money out of your pocket in order to live in their property. So the main difference between it is buying is your property, renting is someone else's property.
Right. And, within each of these different sectors, you're going to have different, freedoms over that property and different rights over that property. But, first I want to just mention, why we're actually talking about this. And that's, over the last several years, I've been seeing news articles and I've been seeing people on YouTube and other sites talking about, how millennials don't want to buy properties or how millennials aren't buying properties. They just want to rent. They want the freedom to be able to move around and, all these different weird ideas that people think that for some reason millennials are never going to buy a home. And then on top of that, we got, the new fact that, real estate markets have gone up quite a bit. And a lot of people are considering, maybe I just rent for a little bit. Let's wait until this market goes down. Let's wait until it relaxes. And I'll just pay rent, for however long it takes until the market comes back down to where I'm looking. And we're hoping we can address some of this and hopefully go over it between each other and add some thought-provoking topics for you to think about and make the proper decision for yourself.
I like to think of buying and renting in this way. I believe that it's more of a liability to purchase a property, but it's more of a risk to rent a property. And the reason why I say that is because when you're purchasing a property, 9 times out of 10, most people don't have the money to pay for it right out front. So you incur some debt, which is a liability, in order to pay for your property and purchase it. Of course, the bank has a hold on the property itself until you pay the bank back for the mortgage. But essentially, that money is the lump sum money that you owe to the bank, hence your liability. Now, the reason why I say that buying is more of a liability and rent is more of a risk is because say you can't make that payment, or say you can't afford an extra pet fee, or you can't afford to make the renovations yourself because in your lease it says you have to do some. If you have a damage on your property, you have to fix it yourself. Now, this is a risk because if you don't have the money to fix it, either A, you're going to have to incur debt, hence incurring more liability, which puts more risk on you, or B, you're going to have to move out because your landlord is either going to have you pay for it and fix it, or you can leave. So you have the risk of not having a home, not having a place to stay, and so on and so forth. So yeah, basically all this means that more liability to buy a house and more risk to rent.
Definitely. And, if you're actually pondering this and deciding what is really better for you, I think it is important to note that, like Garen was saying, there is distinct differences and there's distinct benefits and, detractors for each situation. Now, of course, each one of these is going to be situational, of course, but you're just going to have to look over each part of your own personal financial situation, see where you're at, and see if you can move forward in the best way possible. Now, what I notice around here is that, the real estate market is high, like I mentioned, and people are talking about waiting. They think, oh, maybe I can't afford a property. The prices have gone up a lot recently, but around here, the rental market is so tough as well. The buyer's market is tough because it's a heavy seller's market. But in that same vein, the renter's market is just as tough, if not tougher. I mean, I've heard multiple stories of people laying down 12 months advance rent just to secure a property. Because if you're in real estate, or if you have been in real estate in the past, you know about multiple offer situations. Right now, here in my area, we're having so many multiple offer situations on rentals, which is near unheard of to have people bid over listing price for a rental. That is basically something people don't even consider to be possible. Now, if you have the money for first, last security, or even maybe another fourth month worth of rent, chances are you have enough money to actually put a down payment for that mortgage that you're looking for on a very similar, or if not the same property. Now, that's where I think there can be some misconceptions of what people think they can actually afford.
The issue that I see with purchasing or renting is budgeting aspect of it. A lot of people don't budget properly in order to make that move. Now, some people sit down and they have this issue, then they run it in their head saying, no, I can't afford to purchase a home. I have to rent. I'm forced to rent. And I'd like to say 6 or 7 times out of 10, that's really not the case. Yes, housing prices have skyrocketed. Yes, it's been a little bit more difficult to find the right property for the right individual just because supplies have kind of constrained. Um, at the same time, you also got to understand that the loan rates are so low that you are able to essentially pick up a loan or a mortgage to purchase your property like that. And for most properties, the premium is somewhere between $700 and $1,800. Now, if you think about it, most rental properties are once again between $700 and about $2,000, $2,500. So when you're considering it, you're essentially paying the same amount, if not even less, to be purchasing your property over a longer period of time. Now, another thing that you should consider is actually your percentage rates, because you are going to actually pay interest on your loan. So please, do your due diligence and conduct enough research to understand that your interest rate is also added to your premium.
Right. And, Garen mentioned about that, how basically your prices can be very much exactly the same, if not lower, by getting a mortgage rather than renting. And honestly, that's true. And that's true for one very simple reason, is that rental prices are set by real estate investors. For these real estate investors, these landlords, a lot of them are mom and pops or real estate agents like myself that decided to go out and buy a property. Now, the only way that I'm going to agree to rent that property to you is if you're cash flowing me more money than I'm putting into it. See, I got to make some form of profit off of that, or else it's just charity work. And, nobody wants to do that with such a massive investment that has liability, that needs constant maintenance. So realistically, every landlord is going to charge more for someone to rent their property than they're paying on a 30-year mortgage. And that leaves you with one choice. If you're really talking about, it's the worry of freedom, it's the worry about flexibility, where you can move, what you can do. Realistically, you're going to be paying someone's mortgage one way or another. You can either pay your mortgage and build up equity in your property. That way, if you decide you do want to leave, you can go ahead and cash that out, sell the property, take your equity with you. Now, if you go ahead and rent, the only flexibility that you have is that regardless of the real estate market, it's very easy to get out of that. You don't need to wait around, sell a property, hire a real estate agent, get it all listed, pack up the place. No, you just go ahead, let your lease expire, move out, go wherever you want to go, live in a van, who cares? Now, it is a little bit more tricky when you're buying a house, but I don't think that should dissuade you, because basically that's the only thing that you're lacking. You have that ability to move if you desire, especially when markets are pretty good, especially if you end up buying when markets are bad, because then you have a long run after, where markets tend to be relatively stable and relatively predictable. And that's a great freedom that you have, as well as, like Garen said, there's risk. He said home ownership is liability, because you're going to have to take care of insurance, the mortgage of the property. You're going to have to take care of actually fixing it, maintaining it, any stuff like that. But at the same time, the risk that comes into rental properties, like Garen said, is that, well, you never know what's going to happen. With a mortgage, you get locked in, your price is there for 30 years. With the rental property, you could move in there today, and guess what? The real estate market's doing good. And that landlord says, you know what? Rental prices have moved up. Sorry, you've been here for only 11 months, but I got to let you know at the next renewal period, we're going to have to raise it by $200 a month. And I'm sorry about that. And that might be something that happens to you. That's the risk that, your landlord might say, hey, the prices are going up. Or they might say, hey, I'm selling the property. It's went up a lot. You got to find another place, man. And honestly, I've seen that happen to clients recently. The properties went up in value. They decided they're moving that money somewhere else and th're going to sell the property, and you're going to have to look for another place. Now, I just want to be upfront with anyone that's maybe worried if they're renting. That's probably not going to happen. A lot of people sell properties tenant occupied to new investors. So you shouldn't worry about it too much, but also at the same time, you have that risk of just not ever having control of the property. You're under someone else's boot the whole time. And not to be mean on landlords, but if you're looking for that flexibility, if you're looking for that freedom, you even though that's what people pitch when it comes to renting versus buying, I don't necessarily think you do get that unless it's just the freedom to be able to move at a whim. I think you lack a lot of other things when it comes to restrictions. Your landlords are going to have pets, family members, credit scores, different things that you're going to need that you just won't have. You get the pure freedom of anything you desire to have in your property when you own it. Paint the walls, put up whatever pictures you want, have as large of a dog as you please. And you can just go ahead and enjoy that in the peace and quiet of your home that you actually own.
Yeah, and I love that you said that, because that ties into the point that I really wanted to make here, is that you should 100% consider what you really want out of the property. So do you want a place that you could just call home, a roof over your head that you could move out of at any time? Or do you want something that you can work on, something to make nicer, something to renovate, something personally customized just for you? Now, if you want just a roof over your head and you really don't care where you live and you're only going home for just a bed, sure, rent, be my guest. But keep in mind, there's going to be a lot of fees. And I just watched a YouTube video just the other day on somebody in South Florida, actually, who just got their rent raised 220%. Wow. It's mind blowing. And, it's crazy to see something like that, because you kind of lock in your rate when you're getting a mortgage. You pay your 3%, 4% rate, and you lock that rate in for 30 years, or of course you could pay it off beforehand as well. But theoretically, you lock that rate in for 30 years and you pay only 3%. You see, when you are renting, that can be far more, because the purchasing a property and with a mortgage and renting essentially comes out to the same price of same cost of living. But when you're renting, you also have rent increases, you have common area charges, you have building maintenance. Oftentimes, water and electricity are not included, and that would be have to pay it out of pocket. But of course, you have to do that when you own a property as well. So you have to weigh out the pros and cons of rentals and purchases.
Definitely. And I think with that point being made about thinking about it, I just want to mention, exactly what I think. And personally, I work with renters, I work with buyers, and I really think right now, and in general, I think buying is a great option, especially if you really want a place that you can put your roots down, that you can have complete freedom over, that you can have and enjoy for a long-term period and a secure financial investment. I think it's probably one of the best options you can make. Because realistically, like Garen said, it's probably going to cost you about the same if you're able to save anything by renting. And at that, you're really just giving someone else the money. And maybe you don't want the headache, but at the same time, you're paying for the upgrades of that landlord's property just by paying the rent and the security deposits for the usual wear. You cut that out, and that just goes right into keeping your newly owned property beautiful and of high standing in the community. So personally, I think it's always a great option to, go ahead and buy instead of renting, especially if it's purely for financial or freedom purpose reasons.
100%. I personally agree with that as well. I think just because of the costs that are associated with it, and the risks and liabilities that you do take on to yourself, I really do believe that buying is still the best option, just because at the end of the day, you have something to hold on to. You have validity that you have paid off an asset and this asset contributes to your net worth, and that asset will forever be under your name until it is sold or you pass away. So 100% of the time, I would say buy. Now, whether or not you are buying or renting, this is another big point that I do want to make. Please keep your credit scores in check. You can be denied from places for rentals, and you can be denied from mortgages and purchasing a property due to your credit score as well. Your credit score is essentially what is going to dictate your ability to not only pay off your property or pay your rent, but also to pay off your loan. So if your credit score is too low, you have low odds of paying that off, and people are either going to give you one, higher interest rates, two, higher rent, or three, aren't going to take you at all. Now, to avoid all this, just keep making your on-time monthly payments. If you are behind, try to make maximum payments that you can and pay multiple times or frequently throughout the month in order to cover your losses.
I think that was a perfect piece of advice, regardless of which way you decide to go in your real estate ventures. But, regardless of that, I really hope that we were able to drop a few nuggets of helpful, thought-provoking information that gets you to think about a few things. And maybe we didn't provide all the information you were needing, but maybe we planted a seed that'll get you to do a little more research and a little more consideration into what really is best for you. I know this is a hot topic, and it means a lot to people in our age ranges that are, trying to make sure that they set themselves up financially in a world that's dramatically getting more expensive.
While you're there, go ahead and drop a comment down below on whether you believe renting or buying is superior.
Certainly, I'd love to see it. And I'd love to see if we can spark a little debate and get some helpful criticism down there in the comments. And, with that said, I'd just like to thank everyone for tuning back with the Everyday Finance podcast, where we are working with the everyday person to maintain financial security and establish financial independence.